Good morning, my dear friends. In the last class, we understood by referring elaboratively the concept of Schedule 3. We have been covered like anything left and right. And also we referred the section 7, subsection 2, class B, where supply excludes, where the government holding their constitutional position or the department of the government or local authority provide services covered under the clutches of Article 243G or Article 243W of the Constitution of India is supply excludes. And also we referred, my dear friends, in the last class we too referred by discussing the certain advanced concepts where we understood job work, goods sent for job work by inviting the attention on the part of Schedule 2, Section 7, Subsection 1, capital A, Schedule 2. The list out the all 6 points we listed and highlighted the following points. 1. Job work, namely any process or treatment on the goods of the others. If that is the case, if we are going to do on the any activity on the goods of the other, then the supplier who did any process on that other's goods is called as job worker. Job worker declared under Schedule 2 as a supplier of service. Even though the job worker might have been incurred certain consumables which is material nature, in spite of that he is not a supplier of the goods, he is supplied the as a whole services only. And also we referred in the last class, my dear friends, by highlighting the point of construction supply of services, where the concession received before completion or before obtaining completion certificate from a competent authority, then that supply is declared as services, construction supply of services. And also we referred in the last class, what about ceases to become a taxable person, then the assets of the organization immediately before the cessation is supply of goods liable for GST. However, this is treated as a supply of goods under Schedule 2 is not going to apply if there is going concern is going to continue with the other name like amalgamation absorption taking place. In that case, that is not a supply of goods, is supply of services, which will be declared as exempted nature. Thereafter we referred in the last class by highlighting agreeing to the obligation or refraining from an act or tolerating an act, where there must be existing contract. If you are going to work do certain things, if I'm tolerating, yes, I agree to tolerate, in that case you pay something. If so, for tolerating an act, payment is a consideration. For not tolerating an act, payment is only a payment, not a consideration. Therefore, if only a payment, GST not going to apply. And also we referred in the last class by inviting all these issues along with the difference between works contract and construction contract. Works contract consists of labor and material value, whereas construction contract consists of labor, material and land value. Like this, in the last class we highlighted all these points, my dear friends. Now I am going to give the concrete conclusion. uh, Please unmute Amma. Somebody please unmute Praja. You may be not noticed. All of them unmuted. Very good. Fine. Because if you mute it because you are in unmute. If you there's unmute, unnecessary sounds are reflecting in our studio inside. So whenever you want to speak, you please unmute and speak. Whenever you want to listen, please be mute it. There will be good flow of communication takes place. Now, concrete conclusion in this process, I am bringing to notice the following circulars of Cbic. One can able to expect in the examination. What about securities? Securities, as you are aware of that, neither goods nor services. At the same time, if purchase or sale of securities not a supply. Holding shares is not a service. This and all explained subsequently with help of detailed manner. So, one company invested by buying the shares of other company, that is not a supply. At the same time, if the company already hold the shares which has been sold out to somebody else and got a consideration, that is not going to be a supply. What is not a supply? Just not apply. We have a definition, section 2, subsection 52. Goods does not include securities. Of course, securities includes derivatives. Advanced concept of securities market, put option, call option, this and all not going to come under the category of goods, neither goods nor services. Therefore, no GST apply. But one should keep in mind, transactions in relation to securities will attract GST. Meaning what? Stock broker services, stock exchange processing fees, documentation charges, these and all absolutely attract the GST. So further I am presenting one more circular here. What this circular talks about? Taxability of the transaction of providing a loan by an overseas affiliate to its Indian affiliate or by a person to a real person. So the entire story I will present, just look in understandable manner, my dear, in the given case. Relax and listen here, my dear sir. Let us say H Limited London. It is a holding company. Now, in India, we have a subsidiary company, let us say S Limited, which is New Delhi, is a subsidiary company. Now, they given the loan to the subsidiary company, loan rupees 500 crore, for which they are paying interest, let us say 50 crore. Now, loan is nothing but what? Is a money. Money is neither goods nor services, as you are aware of that. Money is neither goods nor services. So, it is neither goods nor services. Therefore, not a supply. Not a supply. This is known as main supply. If the main supply is not covered under the clutches of GST, interest is nothing but accretion thereon. Means secondary supply. Main supply is not taxable, accretion thereon also be not taxable, since a transaction in money, neither supply of goods nor supply of services. Interest also treated as transaction in money. Resultantly, the entire transaction between this holding company and subsidiary company, though they may be real persons, even though interest may not be paid or paid as the case may be, the transaction neither supply of goods nor supply of services, resultantly not a supply, GST not applied. This is what this particular circular highlights to us. Now, cautioning point here. However, when fee is charged for processing, administering, or facilitating a loan, in that case, it qualifies as a consideration for the supply of services and is subject to GST. For example, in the given case, my dear, on the screen if you refer, you come across, on the screen if you refer, you come across here, in the given example, if the holding company charges, if they received processing fees rupees 2 lakh from S Limited, then supplier of service outside India, recipient of service in India, place of supply is in India. In that scenario, in the case of place of supply in India, obviously it is covered by place of supply in India only. In that case, in that scenario, that processing fees is called as supply. GST apply on 2 lakh rupees. So, IGST apply, 18% will apply on 2 lakh rupees, which is almost 36,000. Who has to pay the GST, my dear friends? Being a recipient, liable to pay GST, which is RCM. Got the clarity, my dear sir? Any difficulty in the given case to understand the process? No, sir. Very good. Now please come, please come. Like that you have to respond to me instantaneously, then we will proceed further. Otherwise, you hold me. I am here to explain with the help of various tools and techniques to make you understand by listening itself. Now coming here, advanced concept, circular of the Cbic with regard to ESOPs, ESPPs, RSUs. What do you mean this? ESOP, nothing but Employees Stock Purchase Plan, ESPP. ESOP, Employee Stock Ownership Plan. RSU, Restricted Stock Units. This and all you are aware of it in your accounts and all. Financial accounts, financial reporting. ESOPs, identified employees, hard workers, to them the company employer want to encourage it. Therefore, they are giving you that employees some company's stake holding. In that case, is it supply? Because in the case of ESOP, if you refer here, employee stock ownership plan is an employee benefit plan that gives workers ownership interest in the company in the form of shares of stock. ESOPs encourage employees to give their all as their company's success translates into financial rewards. ESOPs. Some of the ESOPs, the face value may be 100 rupees, may offer for 1 rupee. If company law permits, even for free also. Now, frees are no consideration, but be careful what type of supply it is even without considering supply, because they have come under the category of red persons, schedule 1. In that case, C basis it. My dear, first of all, ESOPs is nothing but shares, which is securities, neither supply of goods nor supply of services. Therefore, ESOPs not a supply, no GST apply. Coming to ESPP, Employee Stock Purchase Plan, is a company run program that allows employees to buy employee stock purchase plan, usually at a discount over time through payroll deductions. From the salary, we get every month 100 rupees, and we allot you 10 shares every month. Over a period of time, 3 years, you get almost all so many shares. So you become the stakeholder, owner of the company. Though you may be working in employee, because we recognize your services in our company, we are giving a reward as a ESPP, employee stock purchase plan, employee stock purchase plan. Is a supply? Absolutely not. Neither goods nor services. No GST apply. What about RSU? Restricted stock unit is an award of shares that comes with conditions. Usually a vesting period before they are transferred. Meaning what? Aya, company employees, you please work with my company. Sir, Shivakumar sir, are you comfort with some Tamil language you understand, sir? புரியும் கிரேட் நான் யூஸ் பண்ண மாட்டேன் சொல்கிறேன் பிகாஸ் நம்ம தாய் தமிழ் ஆல்வேஸ் நமக்கு பெருமை அதனால தான் அப்பப்போ கொஞ்சம் ஐ ஃபீல் வெரி ஆங்ஸைட்டி அண்ட் ஹாப்பினஸ் ஐ வில் ஸ்பீக் தட்ஸ் இட் பட் டெஃபினெட்லி யூ வில் கிளாரிஃபை இட் தட் ஐ காட் ஐ டிடன்ட் அண்டர்ஸ்டாண்ட் you spoken with me in Tamil also seems to be in English Tamil mixing only you spoken very good okay good புரியும் அது போதுமே so please come back. So restricted stock unit means what? A company giving as offer to the company employees, company employees, we are giving the free of cost, take it. Our face value 100 rupees, triggering in the market 1000 rupees. Those shares, even though at higher premium triggering the stock market, we will give to you. But don't speculate it with that. We will allot you. We will allot you 100 shares per each employee, 100 shares. Keep with you, but minimum 2 years. Lock-in period. Don't sell it. Thereafter you can sell it. So like that the company is offered to the employees is called as restricted stock unit or SU. Is it supply? GST apply? First of all, neither goods nor services. Cbic clarified in the recent circular. Resultantly, the law of the land here says that it is also no GST apply on restricted stock unit. Further, my dear friends, in this process, furthermore clarification in this circular. The circular clarifies that GST is not leviable on the allotment of securities or shares by the foreign holding company to the employees of the domestic subsidiary company on the following grounds. 1. The transaction is neither supply of goods nor supply of services. As a result, not a supply. It is not. It is covered under, I can say that this schedule 1, schedule 3 category items. Meaning what? Employee provide these services to the employer. The employee provides service to the employer in the course of employment. If so, freely provided, for which the employer giving the shares. Is it supplier? No, schedule 3. Therefore, not a supply. Shares are securities which are excluded from the definition of the goods as well as from the definition of the services. As I told you, section 2 subsection 52 goods excludes securities. Section 2 subsection 102 service excludes goods, the securities. Further, very important point. Questions are going to frame in the examination from these circulars like a case laws. Here, one more point highlighting. This point highlighting. It is also clarified that GST not leviable on the reimburse made on a cost to cost basis. Cost to cost basis. Meaning, holding company allotting the shares to its subsidiary company employees, market value is 100 rupees, allotting at 100 rupees. Market value is 10 rupees, allotting at 10 rupees, cost to cost basis. Not recommending anything more. Profit margin is not there. In such case, no GST is leviable on such a transfer of securities. However, circular caveats that if the foreign holding company charges any additional fee, markup or commission by allotting so from the domestic subsidiary company for issuing ESOP, ESPPs or RSUs provided by a company to its employees through its overseas holding company, then GST would be leviable on such amount as consideration for the supply of services of facilitating or arranging the transaction in securities or shares by the foreign holding company to the subsidiary domestic subsidiary company. The GST will be payable by the domestic subsidiary company on reverse charge basis on such import of services from the foreign holding company. Market value 100 rupees Raja, requiring 100 rupees. For allotting to subsidiary company employees, holding company says we wanted to charge processing fees. We want a profit margin of 10%, for example. That element is supply. That fee, that profit margin or that markup is supply, not the entire value. 100 rupees save value, market value, add 100 value, and charging fee 10 rupees per share. In that case, that 10 rupees is subject to the GST as import of services. Further, my dear friends. Yes, Amma. See, market value, cost to cost basis. Cost to cost. What is the cost here? Cost is, let us say, face value. Very good question you ask me. Face value, cost to cost basis means face value. Now, if it has premium, face value plus premium, then it become what happen? Market value. Can you agree with me? Cost to cost basis. Then if it is, these two are added here, these two added here, then the output is market price. Is clear?
Yes.
Cost means face value, add premium means market price. Now, on what basis they are allotting? If that company itself want to buy back the shares, at what price they buy back the share? At a face value or market price? Company want to buy back the shares, Raja. Then what price they will buy from the market? Market value, the cost price. So, what is the cost to me? That cost I am allotting you. I am not getting anything extra from that. That is called cost. That depends. If is a premium, with the premium is a cost. If not a premium, face value or maybe less than the face value is the cost. Means market price is triggered as actual cost. On cost to cost basis means if face value is rupees 100, premium is 900,000. 1000 rupees is the cost for a holding company. There, that company's shares in the market is at 1000 rupees. If they want to buy their own shares, they have to pay 1000 rupees and buy. So that shares allotting to company here at a market price means at a cost price, which is actual cost 1000 rupees. By allotting that, if they are getting fee, separate fee, rupees 20 per share, this 20 rupees, this is what here, additional fee, additional markup, additional commission is the meaning. Any holding company charges any additional fee, any markup fee or any commission like a consideration, that portion alone will add the GST. Not 1020 will add the GST. Only 20 rupees will add GST if the fee is charged for allotting the shares by holding company, subsidiary company is 20 rupees as a markup, that is act as the GST, is the meaning of it. So premium clarified? Premium also won't attack GST. Because why face value is the main supply, not a supply. Accretion thereon, premium also be not a supply. Yeah. You asked doubt. I will explain with the root. You won't forget. Main supply taxable. No, sir. Accretion thereon not taxable, sir. That's it. taken for granted. Can you give one more example for this, sir? I will give. Now you tell me, bro. In the given case, I hope so my beloved friends will answer to me. Yes. I'm very happy by listening the doubts from you, my beloved friends. This means my efforts is going to be fruitful, if not today, by tomorrow. Now, in this consideration, in this process, now X Limited is a trader. Trader of what? Smartphones. He is in Bangalore. Is clear? Now here, C Limited, Chennai, Tamil Nadu. Also, he is a registered person. He also be a registered person. He also trader. Trader of what? Trader of self. Trader of self. He also trader of self. Now, they sold the cell phones here. They sold the cell phones to them. How many cell phones? So much cell phones. Therefore, it is 10 lakh rupees. Total number of cell phones, 10 lakh rupees. And it is given 1 month credit. On account of sale, IGST apply. 18% IGST, which is 1.8 lakh. This transaction, any doubt? He is a seller. He is the buyer. Sale taken place on credit basis 1 month. Is it clear, all of you? Is also circle of the Cbic. That's why I'm highlighting this point. Any doubt, my dear? No doubt. Now, buyer unable to pay payment to supplier within 1 month credit period. Therefore, as per the terms and contract, X Limited charging from the C Limited interest. Let us say interest rupees 20,000. Now, this interest is a taxable or not taxable? You tell me. Why taxable? Excellent. Hats off to that answer. That concept of hold means you would never going to defeat any platform. Is it taxable? Because main supply taxable, therefore the secondary ancillary also taxable. With that, please come back to our concrete conclusion of scope of supply chapter at advanced level. I'm referring here. These are the advanced concepts which one can expect in the examination. I'm referring the Cbic circular and the case class also. I'm going to take up here wherever relevant. Yes, E-subs clear. E-subs concept now is clear. Thereafter, Sarayani. Further, my dear. You may be aware of it. Assume a scenario. You are running a particular very good, a medium size audit firm. You people are 10 partners as a qualified partners running the firm. Under you, there are 20 staff working. You, one of the partner among them, you call me over phone. Sir, could you able to supply to us latest laptops? We want 10 laptops, sir. I said, There are so many models are there. Now AI supporting, artificial intelligence supporting features, laptops also are available. Like that I said. Then you said, in that case, sir, you please send 20 laptops, all the new features. We will test and select 10 out of 20. Then I said, today itself I'm sending you, sir, 20 laptops to your office. Please select it and balance I will take back. Today, 18th February 2026, I supply to you 20 laptops. Is a supplier. I sent to you only for your approval. Till you got approved my cell phones, till you got approved my laptops, I am not going to be raise the invoice. Am I right? The goods sent to you, is on sale or approval basis. So under the GST law, we are recognizing the trade practices. If the goods sent on sale or approval basis, that time is not a supply. Then when it becomes a supply, when you being a buyer, out of 20 laptops, selected for example 10 laptops, sir, 10 laptops are selected so and so and so, then I will raise the invoice. That time only a supply only for 10 laptops. What about balance 10 laptops will come back to me. That balance 10 lakhs, which is I am going to get back from you, not a supply at all. And for the 10 laptops, what you selected is time of supply when you selected. When you confirm to buy, then I will raise the invoice. Now the point arises here. Suppose the buyer not purchased, not returned, and kept for hold in his hands, then what is the scenario? That may also come into picture. GST Council said through government notified, we have a time of supply concept. This transaction becomes supply if the person who received the goods not returned back nor confirmed to buy within a period of 180 days. How many days, Raja? Within a period of 6 months. I mean 6 months. If not returned within 6 months from the date of dispatch, with not returned back nor confirmed within 6 months from the date of dispatch of that goods, then all the 20 laptops in our given case declared as supply, liable for GST. Then what is the time of supply for the 20 laptops? Means the time of supply arises at the time on first day after expiry of 6 months from the date of dispatch. That time of supply. Then you have to pay the GST being a supplier. Suppose within 6 months from date of dispatch, all the 20 laptops returned back. The buyer said, sir, you said AI features, it is not properly functioning, sir. Your laptops I don't want, sir, and returning back, sir. Like that, if the buyer returned back entire 20 laptops, not a supply, within 6 months from the date of dispatch. This is the concept. Having this concept, what happened in fine day, a practical situation arises. I am having the place of business in India, in Chennai, selling the laptops. A call came from New Delhi, event organizer. He called me, hey Mr. Cell phone distributor, laptop distributor, we are organizing an exhibition in Abu Dhabi. Could you able to display your new features laptops? We'll make sales promotion for you. Then I said, okay, very good. How many laptops you want? Send 50 laptops. Okay. I sent 50 laptops to Abu Dhabi for exhibition. 50 laptops. This is known as what? Goods sent on sale or approval basis. Am I right? But sent to outside India. Is it export? The supplier can claim export benefits. the last side. It is not a supply first of all. There is no question of export. Though physically the goods move to exhibition only for displaying please. Once the exhibition is got over, that goods returned back to India. Therefore, not a supply. What is not a supply cannot be called as export of goods. One clarification. Second clarification. Suppose if any customer at exhibition Abu Dhabi purchased, for example, purchased 10 laptops purchased, then in that case it is a supply. That time is export for what? For the 10 laptops. Now, balance how many left over? 40. If not returned back within 6 months from the date of export, from the date of dispatch, then the first day that occurs after expiry of 6 months from the date of export, that 40 laptops also be considered as a supply, time of supply arrears. No, sir. All the 40 laptops entered back into India to my store within 6 months from the date of export, sir. Then that 40 laptops, not a supply, is the way in which is given in the given circular on the screen. This also apply when the goods sent to related person to related persons or distinct persons or principal to a principal or to an agent for participation in exhibition which are going to return to India is not a supply. This circular has own importance from dual, one from GST angle, other one from customs angle. Sir, what about when the goods are returning back to India is called import? No, sir. Liable to pay import duty? No, import duty also will apply because my own goods are coming back to me. Import duty does not arise if the goods are returned within 6 months. If this condition is not satisfied, within 6 months the goods not returned, then what happened is a supply. When it is coming back to India after expiry of 6 months, then we called as import, liable for import duty for the same goods under the customs law. So this is advanced concept, you are mature enough to understand. This point again I will highlight in the case of our customs law when it comes into picture. Now, one more clarification of the CBIC Raja here. Very important clarification of the CBIC. I will explain because, but the moment I saw the provision, the circular, I got so much of a by God gift under kuta bicham madri. I feel very happy to bring it to a notice ample of practical examples by looking these transactions. So let's have a simple example on this. What the circular refers. I am referring this circular. This circular I am explaining in the following manner. Sir, I am a seller of the goods. My name is X Limited. I am a seller of the goods. You are the buyer of the goods. You are Y Limited. You are Y Limited buyer. I am a seller. What I did here is you call me over phone. Sir, we want 1,000 pieces of your product, which around 10 lakh rupees. Please supply. GST what rate, sir? 5%. Okay, sir, we'll pay 5%. On 10 lakhs, 5%, 50,000. On 10 lakhs, 5% how much comes here? Yes. How much on 10 lakhs? 50,000. Correct? 50,000. Okay. So I raise the bill for you immediately with the anxiety. 10 lakh 50 rupees bill issued. Tax invoice issued. After issuing tax invoice, I forget to supply the goods to you because I'm a gajini. Forget. Y Limited, you are Y Limited, you also be presume you might have received the goods. but physically goods not sent. This transaction happened last year, and in the current year GST department came for audit to X Limited. Hey Gajini, where are you? This tax invoice, you have raised the bill for 10 lakhs, 50 GST. Where is the goods dispatch note? There must be goods dispatch. Stock is not dispatched. Stock is with you only. They verify the physical verification of the stock. You get my point? You get my point? The stock is still with the in the godown of the supplier, and immediately they trace who is the buyer. Buyer registered person, buyer limited. Where are you? Show your books. The given invoice. Have you received the goods? No, sir. Invoice only we booked. That means what? In the given case, the invoice received by whom? By buyer with the tax amount, whether he availed the ITC without receipt of the goods services. Department went to Y Limited office, verify the books. Invoice is there with them. They recorded the entire cost of purchases as 10,50,000, which includes GST. Meaning what? They have not taken the ITC. Means they have not committed the fraud. So Y Limited, you people, good person. X Limited supply the invoice but not supply the underlying goods. Is it supply? Liable to pay GST? X Limited not pay the GST because X Limited supplied these goods in the last year. Till now not supplied. Not paid the GST on that because goods also not supplied. But department got confused now. The buyer not avail the ITC, but seller booked the sale as a supply but not paid the GST. If liable to pay GST now means from the last year to till the date has to pay the interest at the rate of 18% and the penalty that ended so much amount coming. Now that client X Limited came to your office. You are a practicing CA. You are practicing cost accountant. So what shall I do? Am I liable to pay GST? Department says liable to pay GST, sir, because I issued the invoice, tax invoice last year with the GST of ₹50. I have not paid till now, but the goods not dispatched, sir. But department is demanding me to pay the GST with the interest, sir. Then you being a practicing accountant, you have to say, hey, Mr. Client, X Limited, look here. Are you going to supply the goods or not? No, sir, I'm not going to supply it all, sir, because the transaction more, sir, previous year transaction. This year, the moment we noticed, then we reverse as a cancel an invoice, sir, not a supply. We are not going to supply, sir. We even want to supply, we supply fresh invoice, sir. Okay. There is a circular, mister. Look here, the circular. A circular very clearly says the supply of goods to the buyer by issuing the tax invoice without any supply of underlying goods or services is not a supply. Is not a supply. That means to say that department authorities has no authority to levy the GST on such transaction which is not tantamount to supply. Which is not tantamount to supply. No GST apply. If no GST apply, no interest apply. But is a procedural violation. Procedural violation. Issue of invoices without issue of a supply of goods or services. Issue of invoices, tax invoices without supply of goods or services is a clear violation of the provision of section 122. Section 122 of the CGST, where you have to pay penalties sufficient. So by coming to the CA place, by coming to the CMA office place, the client has been saved so much. Industry should realize it. Instead of doing their own has to take the help of chartered accountants, cost accountants who are pouring their entire life to acquire the complicated provisions in a simplified manner to practice. If you give that suggestion properly and reply no to department with a circular, then you can raise the bill of rupees 10,000, 15,000 rupees from the client. For this cream layer earnings, you have to struggle to qualify. No other option. Now got the clarity, the conceptual one.
Yes, sir.
With this, proceeding further, my dear. This is all advanced concept. Many of faculties who are claiming we are the IDT faculties, IDT faculties, IDT faculties, teru kothirikare, IDT faculty nowadays. But without having the practical knowledge, too difficult to handle the indirect taxes. And mesmerizing, my dear sir, through social media, because I'm very hearted saying to my beloved students. People are creating the dubious manner of a views. Empa, 1.5 lakh views, 2 lakh views. To that extent, students are not there all India basis. Then I came to know these and all paid views. Uploading video and getting the views by making the payment to organizations. There are people are there to create the views. Either now then the new generation Genjis are coming who are looking for CA classes. Rafi sir, only 100 views. Then 10,000 views, 50,000 views. Apo. Rafi sir is now behind of all faculties. No problem, because I dedicate my life for teaching. I never going to quit at all. Money should run behind us. So at this moment, I humble request, if the occasion comes, when you feel free, when you are interacting with your WhatsApp or Facebook or Instagram, wherever you are in that social platform, please tell your experience with our classes. I'm not going to say, you say like this, Rafi, aha, woho. I won't say. What you realize, just tours. Thereby, the social media Genjis who are looking for social media, they also come to know, oh, one option, Rafi sir also is available. I'm just a humble request, when you feel free, when you feel happy. Not that it is to be, because I need the support of my beloved students who attend my classes. I need their support. You are my strength. Now please come back. Look on the screen here. Entire story is like this. No claim bonus. Insurance companies no claims. What is it is? I will tell you, my dear, no claim bonus. Even if you take insurance company health insurance, continuously for the past 5-6 years going on, you are paying the insurance premium to a national insurance company or any other insurance company for sake of discussion, or maybe a general insurance for car insurance. Take car insurance as the best example. Every year you pay the car insurance, same company, insurance company for past 5 years. Then as per the company policy, 5 years continuously you pay, and during the 5 years you not claim any compensation from the insurance company. That company will offer you, sir, 20% of premium now is a bonus for you. Every year 1 lakh you pay. Fifth year bonus cut 20%. You pay just rupees 80,000. Means we will give the receipt to you for 1 lakh, but bonus is there. We collect payment from you only 80,000 rupees. In that case, such a no claim bonus of rupees 20,000 is a supply. Anybody? No claim bonus is supply. Think and tell me. No claim bonus is a supply. Tell me, man. Are you hearing me?
Yes, sir.
No claim bonus part is supply.
No, sir.
Why not? As a friend, talk with me as a friend, not a faculty professor and all. I won't like friend. Only thing, vada poda, that alone, little bit not required. Otherwise, you are my friend. Speak. Why? Why? You are right. Answer right. No claim bonus not taxable, sir. Reason.
Because it's a legal thing.
Think and answer correct. Explanation is not catch holding properly. Concept. Nothing but discount, Raja. Discount. This discount well in the terms and conditions. At the time of taking the first year policy, that time itself you are aware of it. For continuously 4 years, you pay the premium full amount and not claim any compensation for the past 4 years. And the fifth year, you will get bonus of 20% of premium amount. Is as per the terms and conditions at the time of execution of the contract, first year itself. It is called a discount. Discount is allowable deduction as a trade practices in the given scenario. It covered under section 15 subsection 3 category of CGST. Therefore, the discount part not is applied, GST not applied. Very important area I bring you notice. A latest amendment also I can say in this regard. Circular, Raja. What is the circular here? You know, this circular. Latest one can expect in the examination. Circulars based questions are there at final level, especially. Of course, intermediate level also is coming nowadays. What is this circular says? PPI, prepaid instrument. What is called? PPI, prepaid instrument. What is prepaid instrument and how to understand this and that? Assume a scenario, you qualified as a chartered accountant or cost accountant, you got very good knowledge in indirect tax, you got highest marks in IDT, 90 plus marks you got, and you qualified, you got impression to give gift to Rafi sir. You thought to give gift to Rafi sir, let us say pen. Rafi sir has many pens. You want to give the gift a shirt, there are so many shirts. You want to give gift of a camera, he has camera. Laptop, he has laptop. iPad, pad is there. Cell phone is there. Whatever you think, watch is there. Smartwatch also is there. Then you thought something I want to give the gift, but let us disable Rafi itself. With that intention, you want to give some gift. If you give to me is money, I won't consider money. Why you give the money, sir? I will say. We'll take that different issue. But telling you, cash out, if you pay something, no, inconvenient feeling. So you want to give as a gift, but that gift item can be used by the refuser, can purchase as per his will and wish. There, prepaid instrument concept arises. Prepaid instruments, that means vouchers, equivalent value, money value, 500 rupee vouchers, 1000 rupees vouchers, printing and having the tie-up with the various corporate companies and that person who printing and selling it. Such a prepaid voucher sellers are two types. One is authorized by the Reserve Bank of India. Mr. X and company, Y and company, so and so, Akbar Travel or the what we can call the mind transfer. You people willing to print vouchers and sell gift vouchers, values of rupees denomination 100, 200, 500 like that. Apply for license. We'll grant the license to. So RBI licensed person selling prepaid instrument, prepaid instrument, prepaid instrument. Let us say 500 rupee vouchers. There are 10 vouchers. 10 into 5, 5,000. They are printing and selling to you. In that case, the person who sells this is authorized by Reserve Bank of India. Then the law of the land here says circular. Hey, Mr. Seller, you are not liable to pay GST on sale of the prepaid instrument. It's a money because you are authorized person by Reserve Bank of India. Now, that is called prepaid instrument. If authorized Reserve Bank of India person sells, it is a money transaction. Therefore, not a supply. Voucher issued. Voucher is PPI. Voucher is PPI. RBI recognized person supplied. Then falls into the money transaction if a money means neither goods nor services. GST not applicable. No GST. Other category person who is selling this vouchers, not authorized by Reserve Bank of India, but he is selling by having the tie-up. Shopper Stop, Adidas, various corporate companies, or the Chroma companies, Reliance group of companies. With that, they have tie-up and giving vouchers, gift vouchers selling, each 500 rupees denomination. But they are not authorized by Reserve Bank of India, and the voucher is valid in only recognized shops only. In that case, it is not a prepaid instrument but gift voucher. Voucher is not a PPI but used to claim goods or service, whatever we can be used for it if it, other person is accepting that voucher as a equal to money. If non-authorized by Reserve Bank of India persons are selling the vouchers, gift vouchers, not a money transaction, but it is called as actionable claims set by Cbic. Schedule 3, point number 6. Supply excludes actionable claims. Resultantly, GST not apply because not a supply. Next point. Distributor sells on own account principal to principal basis, meaning thereby, let us say a gift voucher rupees 500 into 10 is equal to 5,000. This is sold by X Limited. To whom sold? Sold to Y Limited. That means this fellow is wholesaler and this fellow retailer. This transaction is called principal to principal basis. The transaction in money or the transaction in actionable claims, like the supply of goods, supply of services between X and Y. Whatever they sold, for example, 5 rupees voucher sold at rupees 4,000, sold rupees 4,000, and Y Limited selling this after buying from X Limited to Z Limited at rupees 4,500 is also P2P. Retailer selling to another retailer, for example, P2P. So the 4,000 not taxable, transaction between X and Y. 4,500 also not taxable, between Y and Z. Tomorrow, if it is sold to Mr. CS student end user at what price? 4,800. Face value of the voucher 5,000. That means you purchase the voucher at 4,800 and given to Rafi sir to buy as he like manner, worth how much? 5,000. Now Rafi sir going to uh, Adidas showroom. He want to buy walking shoe. Nowadays Rafi sir is not properly walking, therefore much more belly is coming. To reduce walk required, doctor suggested. Therefore, to buy the canvas shoes from Adidas, I approach, which is rupees 8,000. Then I purchase for rupees 8,000. I given to him 3,000 rupees cash, and you given a gift voucher to me rupees 5,000. I given to him. He saw, oh, this gift voucher is our company accepting, sir, because it is a listed one only. Very good, sir. So take your shoes. Now the seller where accepted the gift voucher of rupees 5,000 equal to money is a consideration. For whom? For the seller. For the seller who supplied that shoe rupees 8,000 where the holder of the voucher redeemed it, that time is a time of supply. For what value? For rupees 8,000 is at the time of reaching to the end user where it becomes supply. In between, wholesaler to principal, principal to retailer, retailer to another retailer, a retailer to CA student also be not a supply. When the CA student went to the shopkeeper and given this voucher and get the goods for it, that time the transaction wind up in the hands of the supplier, namely that particular either shopkeeper. When he sells rupees 8,000, received 3 rupees cash and received equivalent of 5 rupees vouchers, that time is a consideration for the supplier. Then the supplier, seller, Adidas wala should pay the GST on rupees 8,000. This is what is mentioned here. Distributor earns commission. What do you mean by commission again? Sir, what about commission? Who knows? Y limit has vouchers. Y limit appointed me. Hey, Mr. Commission Agent, you please propagate my business in the market. If I get customers from you, I will give the commission to you. So such a commission paid by retailer or wholesaler to a commission agent to promote the vouchers. The vouchers are available with me. Just now I told no, Rafi sir classes, who knows? Nobody knows, because Rafi sir is not popular in the social media. He is so far taken the class face to face, physical classes only. That's why I told you, sir, my beloved friends, if you feel time, you please tell about our classes in social media wherever you are feel comfortable. Like that I said or not, because by the time people come to know. But I'm not paying any commission to you because you are my strength. Therefore, no commission, no concession. If there is a commission paid, officer, for example, for doing promotion of this to you, is a supply. Now please come back. Further, marketing branding support, yes, GST applied. Unredeemed vouchers, or in case such voucher officer holding with him of rupees 5,000, only 1,000 rupees, two vouchers, 500, 500, two vouchers, 1,000 rupees only redeemed. Balance 4,000 kept in the pocket. By the time you notice, the time period to encash, that is expiry period, is over, got over. I can redeem unredeemed voucher. Unredeemed voucher not a supply. Of rupees 4,000 not a supply. GST not apply. Got the clarity? A very big circular, just like that I explained to you by showing in yes or no category. Any doubt in the given case? Yes?
No.
At this moment I can say that the entire process of scope of supply we brought in our hand, kaikulli pidikillo vachesindi, entire scope of supply. With that as a platform, we know what is supply, what is not a supply. Then we look into the new chapters from now, looking ahead: composite supply, mixed supply, followed by composition scheme, thereafter reverse charge, forward charge, exemptions, time of supply, place of supply, value of supply, input tax rate, registration, tax invoice, e-way bill, e-invoices. Then we proceed to have advanced concept of the GST, because this and all basic intermediate syllabus only, referring at final level to have a recapitulations. But from this CA Institute Wala very clearly said, we are going to ask from these basics comprehensive case studies, which is 30 marks are going to come. Balance 70 marks from advanced concepts. Means adjudications, penalties, interest computation, demand and recovery, appeals, and all will come into picture. Search and seizure, confiscations, offenses, penalties, is and all advanced concept we take up. Dear friends, now today at this moment I am concluding session. A new chapter will start by tomorrow, hopefully exactly by 6 a.m. with new chapter, composition scheme. I will say a composite and mixed supply followed by composition scheme. See you next class. Thank you, my dear friends.